errors hidden in the trial balance. Now you were told that once your trial balance balances, everything is alright. But that is not necessarily so, because we could have errors hiding in it. An error is an unintentional mistake. And in accounts, there are 6 types of errors that you will not really notice on your trial balance. And those 6 types of errors are errors of commission, errors of omission, errors of principal, errors of reversal of entry, errors of original entry, and errors of compensation. So what should we do? Well, the correction of all errors that you've discovered should be recorded in your general journal first, before you make the changes on the accounts. Because once the books of accounts have been closed, you can't go back and take an eraser and take up the stuff and put in the right thing. You have to use your journal. So those errors then that do not affect the trial balance, you simply put them in the journal by canceling what was done incorrectly with the correct action. So let's go through these errors and see what we do. So the first one is the error of commission. And an error of commission occurs when information is posted to the wrong personal account. So for example, if the names are close, you could have a problem. Say, for example, $230 paid in cash on account by D. Jones have been credited in B. Jones' account by mistake. So we need to do is to discover what should have been done and compare it with what was actually done, and then make the correction. So the correct thing was to debit cash and credit D. Jones. But instead, we debited cash and credited B. Jones. So the cash is alright, but the Joneses are incorrect. So to do the right thing now, I need to credit D. Jones, and obviously to get the information out of B. Jones, I will simply debit, because when I do the opposite, I'm taking away. So I'm going to debit B. Jones to take the information out of him, and credit D. Jones to put the information into his account. And then for the journal, you simply say what you did, so a little note at the bottom. Alright? Second error, errors of omission. Now, error of omission occurs when information received has not been posted to any of the accounts. So for example, if you receive an invoice but it fell behind the desk and remained unnoticed, it can't be recorded, right? So invoice number 230, dated February the 4th, indicating $400 in goods sold to Smith, was not recorded. Maybe this is the one that fell behind the desk. So we need to do what? Well, we know what we should have done was to debit Smith and credit sales, but instead we didn't do anything because we didn't have the invoice. So we can do it now, right? So you debit Smith, credit sales with the information, and just simply say you're now recording that invoice. All right? Errors of principal. Now, error of principal is when information has been posted to the wrong type of account. There are 3 types of accounts: real, personal, and nominal. So if you put a real item to a nominal item, then the trial balance is going to balance, but you're going to have a problem with who you're sending the information to. So for example, a computer that cost $1,500 cash that was purchased for business use had been entered in the books as purchases. Now we know purchases refer to goods bought for resale, and that computer was not bought for resale. So we should have debited the computer and credited cash, but instead we debited purchases and credited cash. So the cash is okay, but the computer and the purchases are wrong. The computer should have been in and not the purchases. So notice, computer should be debited, so I'm going to debit the computer. And to get it out of purchases, I'll credit the purchases with the information and state what happened. Well, let's go to the error of reversal of entries. Now, error of reversal is when information has been posted on the incorrect sides of both accounts. In other words, you do have debits and credits, but you debited instead of crediting and vice versa. So, cash purchases of $320 have been debited in the cash account and credited in the purchase account. Now we know that what should have happened is that we should have debited purchases, because purchases is always a debit, and credited the cash. But instead, we debited cash and credited purchases. So we do have the two correct accounts, but they're in the wrong positions. Now to get them to come to the right positions, we have to double the information. So I'm going to debit the purchases and credit the cash as I was supposed to, but those numbers are currently on the wrong side. So I have to double it, because one will be to take it away from the wrong side and the other part will be to put it in the right side. So the number is now 640. Again, we state what's happened. Alright, our fifth error is the error of original entry. An error of original entry is when the figure posted to both accounts had been incorrectly entered from the beginning. So the figures on the books are completely different to the figures on the source document. Example, cash sales of $304 had been recorded in the ledgers as $340. Now, we know that the correct thing was to debit the cash with $304 and credit the sales with $304, but instead we've debited cash with $340 and credited sales with $340. So we do have the correct accounts in the right positions, but we got the wrong numbers. So we can put back the accounts in the correct positions, right? No, you can't do that. You want to take away the mistake. So if the mistake is too high, we got to flip them around so we can take away. So we're going to debit the sales and credit the cash and take away the difference, right? So the difference was 36, and there we go. We've adjusted both things. Well, the last of those entries is the compensation error. So compensation is when an error in information posted to one account is cancelled out by a similar error on an opposing account. So in other words, a mistake on the debit side is cancelled by the same mistake or a similar mistake on the credit side. For example, purchases had an extra $36 posted to it, and a Mr. Carter account also had been credited with an extra $36. Now, what should have happened is that we should not have recorded anything, but instead, we debited purchases 36 and credited Carter 36. So obviously, to get this out, we just flip it around and take away those numbers, right? So in other words, we credit the purchases and debit Carter. So we put that in, and that will remove that error from the books, and we just would have completed that action. So there you have it. Those are our 6 errors, and I just want to thank you and keep practicing your account.